Welcome to the final day of the IIS Global Insurance Forum's members-only session. We have another interesting session lined up featuring the first ever Vanguard Market Development Award recipient, Rajni Varia. This award was developed to recognize those who substantially advanced the development of insurance in an underserved market or emerging economy. Rajni's impact on the African and India insurance market is quite impressive, as you will hear in the next session, led by James Vickers, chairman of Gallagher Re International. James and Rajni, welcome.
I'm delighted to be able to speak to you today and introduce a fireside chat with Rajni Varia, the winner of the Vanguard Market Development Award. Rajni has invested 3 decades of his life developing the African reinsurance industry. He not only developed his career at Munich Re in Nairobi, but also in the process grew Munich Re as the lead reinsurer in East Africa. Following that, he joined Zep Re, and under his leadership, Zep Re developed from a small regional reinsurance player into an international company with operations and clients in 3 continents. In addition to building up Zep Re, Rajni has also trained several generations of African reinsurance leaders, providing formal training, informal mentorship, and ongoing guidance. Rajni was instrumental in developing African solutions for African reinsurance needs, including an Islamic reinsurance product and products to simplify the transit of goods through the COMESA countries. Over 30 years, Rajni has developed a reputation as a genuine technical expert who is also pragmatic, able to take a long view when building relationships, and a man who honors his word, essential when building trust in an emerging reinsurance industry. In recognition of his services to the advancement of the reinsurance industry across Africa and South Asia, we are proud to be able to honor Rajni with the Vanguard Market Development Award, to recognize those who have substantially advanced the development of insurance in underdeserved markets and emerging economies. Now let's hear from Rajni himself. First of all, Rajni, you were at the helm driving the success of Zep Re from a small regional reinsurer to being a trusted, innovative, and successful reinsurer across Africa, the Middle East, and India. What was your strategy? How did you do it? And did it differ in each of those markets?
Let me stress at the outset that I was recruited by Zep Re to transform the company from a loss-making organization to a profitable reinsurer operating commercially. To transform Zep Re, I had to first understand the culture of the company at that time, its financial position, and its technical abilities. When I joined Zep Re, it had a small premium volume, mainly from compulsory sessions mandated by a few COMESA countries. It was not profitable. It had negative shareholder funds, had practically no respect in the market. In fact, some insurers and some brokers saw Zep Re as a dumping ground for technically poor quality underrated business. We realized that a global dynamic strategy was needed to correct all these negative aspects. This would then assist us in growing not only in our core COMESA markets, but also in Africa at first, and then in the Middle East, and then in the Indian subcontinent. Reinsurance, as you know, is a professional services business. We needed to develop our workforce before we could do anything else. The first task was to develop the human resource that had a shared vision and was technically sound in all areas. For example, underwriting, claims, technical accounting, and financial accounting. To achieve this, I developed detailed menus and training material. It was clear that I would have to lead by example. Hence, I personally got involved in all these operational areas. Regular classroom-style training sessions were held, but greater emphasis was given to one-on-one, on-the-job training. It was almost like setting up a new reinsurance company from scratch. As the underwriting skills were developing, we started analyzing the business that was offered to us, both treaties and facultative. The team was sought to seek all relevant information. For example, lead reinsurer's share, cedent's retention, treaty balance, profitability, claims history, and what was critical was the payment record of the brokers and the insurers. With this, what was most important was that we now learned to decline the business that was undesirable. This changed our image, and the market realized that we could no longer be treated as a dumping ground. While we were concentrating on underwriting, we hadn't forgotten claims. Handling of claims also formed a very important part of our training. I and my leadership team stressed at every opportunity that claims had to be processed quickly and settled promptly. Of course, due care had to be taken to ensure that the claims were indemnifiable. Prompt settlement of claims enhanced our reputation. Now that we had a strong base, we actively sought increased shares of existing treaties, as well as marketing with reputable brokers for new business outside of our core markets. Our premium income started growing, and the bottom line started turning, and the company started becoming profitable. The increase in premium volume meant that we needed further capital. This was raised as follows: retaining the profits we made as shareholder funds, seeking additional capital from existing shareholders, and seeking new shareholders in the COMESA countries. Now that we are technically skilled manpower, profitability, increased shareholder funds, and reputation for quick claim settlement, we started competing for leads of reinsurance programs in our traditional COMESA markets. These strategies that we implemented between 2003 and 2011 had the following impact: an increase in premium income from $25 million to about $64 million, a growth in profit from a loss-making position in 2003 to a profit of $8.8 million in 2011, and the shareholder funds grew from $8 million to $67 million. We realized that further growth from our African markets would be relatively small. There was a need to expand our geographical area of operation. After all, reinsurance is a global business, and geographical spread increases the probability of consistently making underwriting profit. We now decided to grow out of Africa. To achieve this, we needed a further injection of capital. We had been talking with African Development Bank and DEG Germany, and both of them came on board first in 2012 and the second in 2013 as shareholders. With the additional capital we received, we targeted the smaller countries of the Indian subcontinent: Nepal, Bhutan, and Maldives. We replicated what we had already done in our core COMESA markets. Rely on reputable brokers who are active in these markets. Start with small shares in a few selected companies. Demonstrate our technical abilities and willingness to pay claims promptly. Once these markets were satisfied with our service levels, we started competing for leads. In a couple of years, we became a leading reinsurer in all these countries. All along, we had realized that getting a good rating is very important to our business. So we had approached AM Best, which is an internationally recognized rating agency. And in 2008, we achieved a B rating. This improved in 2011 to B plus, and in 2016 to B double plus. Along this journey, we had not forgotten the insurance regulatory authorities. We had developed and maintained good relations with all the insurance regulatory authorities in the markets that we were active in. As you can see, the strategy for all the markets was fairly similar. That is, having a technically sound workforce, prompt, efficient service, pay claims quickly, adequate capital to support the business that we're writing, and most important, a good rating. So this was more or less a strategy that we had followed in all the countries that we were operating in.
Well, it certainly has worked very well. There's one point that you touched on there, which was about training and mentorship. And I think, you at an early stage in your career recognized the importance of mentorship, both informally and informally, and were very active on developing training programs, ultimately ending up with the ZEP Re Academy. Could you talk about a little bit more about your approach to training and mentorship and the impact it's had on the industry, and perhaps talk a little bit about the impact it had on you personally?
Training is a subject very close to my heart, as you say. I was recruited by Munich Re directly from a firm of consulting engineers. I thus joined the reinsurance industry from an engineering background without having spent any time at all in direct insurance. Initially, my main task was to carry out engine surveys, risk surveys for and underwriting of engineering classes of insurance. I soon realized that there was a general lack of local knowledge for these classes. I also realized that top management positions, and to some extent even middle management positions in most insurance companies, were dominated by expatriates from Europe and India. Most of the insurance companies at that time were subsidiaries of overseas companies, and these were mainly concentrated in major cities without having any branches. I felt it was my duty, my responsibility to develop local manpower. I started training and mentoring individuals who showed promise. And I did not limit it to the organizations that I worked for. I developed training programs which were relevant to the needs of developing countries with unsophisticated, labor-intensive industrial bases. Many of the persons I mentored and trained went on to occupy senior positions in insurance and reinsurance companies, and some even went on to head these companies. This development of local trained manpower led to a reduction in the need for expensive expatriate manpower, which led to a growth in the number of local insurance and reinsurance companies which were locally owned, and to an increased insurance penetration, reduction in outflow of insurance premium, and it even created an inflow of insurance premiums into Africa. Without this growth, the African insurance industry would have remained at the mercy of international reinsurers whose interest in Africa had always been volatile. I noticed that insurance personnel from African countries went to Europe. As you are aware, both Munich Re and Swiss Re are training institutions. I myself attended one of them in Munich. Mm-hmm. It was always my dream that someday we would have a local training institution that met the training needs of African insurance and reinsurers. Setting up ZEPRI Academy in 2016 was a giant step towards fulfillment of my dream. Prior to this, for over 10 years, I was also a visiting lecturer at the West African Insurance Institute in Banjul, Gambia. This was my humble contribution to the development of manpower in the East African region and in the wider African region.
I'm not sure that it was a humble contribution, Rajni. I think that training and the background that that gives for the next generation is one of the most important things that the IIS does. And it's extraordinary the impact that you've had in that. Moving on to slide.
I always believe that knowledge has to be passed on. There's no point in learning something and keeping it to yourself. We need to pass it on.
Well, I agree with that sentiment completely, but unfortunately, in my experience over the years, not everybody always shares that same entirely correct vision. But just turning to something else, with your very wide experience of volatile markets, I mean, the current global landscape is difficult, is volatile, geopolitical, socioeconomic, health, human, environmental crises, all having an impact on our industry. You've worked in the forefront of some quite challenging and difficult countries facing a number of different issues. Have you got any advice that you could give to the insurance leaders of today, how to navigate some of these challenges of volatility?
What I would say is, in this ever-changing world, and it's changing very quickly now, volatility in insurance is inevitable. If you look at the second half of the last century and to the first part of this century, every decade had its share of natural catastrophes: earthquakes, volcanic eruptions, cyclones, floods, droughts, heat waves. And our friends in America right now have a storm cyclone blowing through Florida. HIV/AIDS from the 1980s and the recent COVID pandemic pose serious challenges to both life and medical insurance. In each case, the immediate reaction was to exclude the same from cover. Some insurers, in time, tweaked their products to cover both of these at a cost which was not prohibitive, and went on to make some profit. My advice to the insurance leaders today is to accept the volatility. Instead of walking away, shying away from these challenges, they should be seeking opportunities in this new landscape. They should be constantly working towards developing affordable insurance products to meet the needs of the changing landscape.
I think that's, I would agree with that sentiment. I think too often the industry, when faced with troubles, tends to try to exclude rather than look to ways to include and provide cover. Not so straightforward though. Looking back over your career, what do you consider your greatest achievement? And perhaps you could explain why you would pick on one thing of the many things you've done as your greatest achievement.
For me, very simple. My greatest career achievement was handling of the claims arising from the 7.8 magnitude earthquake of April 2015 in Nepal. At that time, ZEPRI was the second largest reinsurer in Nepal, and that only by a small margin. This made us the first truly African reinsurer to face substantial claims from a natural catastrophe of this magnitude. We were able to pay the claims in time and efficiently. I personally visited Nepal just days after the earthquake. Even the shocks and tremors were still being felt, I toured the areas that were seriously affected by the earthquake. We had to assure our clients that ZEPRI was standing with them at this difficult time and would honor their claims. To this end, we immediately started remitting funds to our cedents even before they had made any request for settlement of claims. Our reputation grew. Our handling of the claims from this catastrophe cemented this reputation as a reinsurer that could be trusted, a reinsurer that could be trusted, both financially and technically. ZEPRI was now seen as a true competitor to the global reinsurers in the sub-Saharan African region and parts of the Indian subcontinent. I found this very satisfying because people outside of Africa did not trust African reinsurers, and we were able to convince markets and insurers that we could be trusted.
It's very interesting that you chose that as your greatest achievement, because I think this is, as an industry, we sometimes lose sight of that is the product that we are selling. And doing that excellently and well is what it's all about. Great example to have chosen out of all the many things you've done in your career.
If I may just add something. All along, every time I've been training people, especially in classroom style training, when you got 20, 30 persons sitting before you, one of the questions I generally ask people is, what do you think is the reason that all of us have employment in insurance, reinsurance? And people would give different answers. I'm a commerce graduate, and I'm that graduate, and I worked in a small insurance company for so many years, and I've done this and I've done that. And I would say, well, while I agree with you, I have a different view. And my view is the only reason we're employed in insurance, reinsurance is because people have claims. And that is the only reason. That's what we should look after.
You're absolutely right. Something that, as I said, I think people lose track of. Can I ask you one last question? Looking forward, based on all the experience you had, what do you think is the biggest challenge, but also the biggest opportunity that the global insurance and reinsurance industry faces?
I'm not so sure about global. My experience is largely in Africa and emerging markets of the Indian subcontinent. So let me speak about, and I'm sure that applies then to the global scene as well. The biggest challenge and opportunity for the insurance industries of these countries is the very low insurance penetration rate. The average insurance penetration rate for Africa is around 3%. And if I were to exclude the Southern African countries, this would fall to around 2%. Why is it challenging? It is challenging because per capita incomes have been very low, and insurers have not attempted to penetrate into rural areas and to develop low-cost policies to cater for this market. Most of the African countries, even in these difficult times, have GDP growth rates varying between 3 and 6%. The average age of the population is around 20, 25. So now you have a situation where the economies are growing, the population is young and growing, and the literacy rate is growing rapidly. The challenge is to develop products which are aligned to the needs of the growing economies and suitable for this young population. This gives a great opportunity for substantially increasing the insurance penetration rate and therefore premium volumes.
I mean, it's it's a great way to end this chat, because if I look at the projections of growth in Africa and population growth for the next 50 to 100 years, it's very clear that Africa, in the developing countries, it's where the future lies. And I think that your advice about how to grow and develop business there it'll be well thought of and considered in the years ahead. Rajni, it's been a great pleasure to be able to speak to you today, to just have an attempt to scratch out a little bit of the enormous knowledge that you have accumulated, and to be able to talk to somebody who's given so much back to this industry. Thank you very much.
Thank you. Thank you for your kind words.
Reinsurance is fundamental to ensuring comprehensive risk management, particularly in markets susceptible to large-scale losses. Rajni's work supported market expansion, and in doing so, ushered in greater resilience to areas with high-risk exposure. Rajni's success in broadening accessibility of insurance and risk management to uninsured and underinsured markets is truly inspiring. Congratulations, Rajni.